Hello everybody, I hope you're having a wonderful month. Today I am actually being joined by Melissa. She is from our Claremont office and she has a lot of expertise in the real estate side of the business. She's also an advisor here with us. So we thought we'd have her come in and talk a little bit about what's happening in the real estate market. Definitely September is living up to its history of being a month that has some volatility. We've been down 2 weeks out of the 3, and the market's off about 5%. So we're definitely seeing the weakness that we thought we would see, and that probably will continue into October. It's not uncommon to have the October effect. There really is no scientific or reason behind October being a bad month or people thinking that it is. Actually, October is the third best month for the market historically, but there is this perception because of some big down days that have happened in the market that October is a negative month overall. Usually the first couple of weeks is, and then the second half it starts to rebound into the end of the year. But as we look at really what's happening in the market, there's 3 very distinctive items that need to be looked at. One is the value of growth stocks right now. And just the simple fact that growth stocks are actually pretty high. They're about 13 times book value. That is historically one of the highest spots they've ever been, compared to value stocks, which are trading about 1 times book value. So you can see that the growth side of the market is a lot higher than what the value side of the market is. And when you get that big deviation, it's not uncommon to have the growth side of the market kind of come back down. And you started to see that already with the NASDAQ kind of underperforming the Dow Jones in the last couple of weeks. Number 2 is what's happening in China with Evergrand. It's a big development that issued lots and lots of debt. And there's real speculation that they could go bankrupt in the next, who knows, 2 weeks, 2 months, but they are in definite financial trouble. And the real uncertainty is whether or not the Chinese government will decide to bail them out or let the kind of dominoes fall. And so that's putting a lot of uncertainty in the fixed income market and basically anybody that would have exposure to the loans that they've made and the bonds that they've made. And then the third thing that is still in the news is obviously inflation and what's happening there, and the lack of shipping is made huge news recently. There right now currently is about 66 ships sitting outside of the port of LA and Long Beach, and they simply can't get them unloaded. The ports haven't been super helpful. They wanted to expand hours to get more containers off, but that hasn't happened as of this point in time. But they're sitting, about 10% of the world's containers are sitting off the coast of California ready to be unloaded, but haven't taken place yet. It's gone so far that Costco and Home Depot have both bought their own ships and own containers. Now where they get them unloaded at, I don't know, but they're actually doing their own shipping, trying to get product here quicker than what's currently happening. So these are all the things that really are affecting the economy right now. Interest rates have also started to move higher. We're up to about 1.52% right now on the 10-year. And as we look at interest rates, one of the things that people look at often is the housing and real estate market. So I'll have Melissa talk a little bit about what's going on there.
Yeah, thank you, Henry. And you're exactly right. So the fixed rate mortgages, the interest rate tends to follow the 10-year. We just haven't seen this increase hit it yet. Just as of last week, the average interest rate for a 30-year fixed rate mortgage was 2.88%, but I would expect that to start to increase as we see the 10-year increase. Another trend that we're seeing in the real estate market is its slight return to normalcy. So as we know, during the pandemic, the real estate market was super hot, off the chains, and it was just skyrocketing. The interest rates that had fallen increased buyers going into the market. Coupling that with the low supply and the shortage of homes for sale, that's what took prices up to the next level, and we just saw those kind of go crazy and continue to increase. We're starting to see that come back down slightly. We have still seen an increase year over year of 15% on home prices. National average for a home is hit over $350,000. In California, that hit $800,000. But like I said, we are seeing it slightly return to normal. So The majority of homes that are selling this month in September still sold for over asking price and within 2 weeks, but those numbers are starting to come down ever so slightly. So I wouldn't expect home prices to fall, but I would expect them to stop to increase again as much as we've seen them do in the past.
Thank you. That's great information. We are coming up to the end of the year, so all of our clients that are 72 and older, we will definitely be getting in contact with you regarding your required minimum distributions if you haven't taken them already. And I hope everybody's having just a wonderful month and look forward to speaking to you again. Thank you.